Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and we take a look at hotspots in the markets for today, Monday, May 23rd. My name is Todd Rich. Yes, I'm back. I'm with Nadex. And with me, as always, Brian Caprice from Keep Trading Simple. And I do have my dog here on my lap. She decided to join me down here in the basement this morning and then promptly go through a vomit attack. just what I needed right before we do this.
Just like children.
And I got plenty to clean up down here when we're done. Fun. All right, we do have some hot spots in the markets for this for today. It's going to be, I think, a bit of an interesting week as well. What we do have moving, we have on some comments on things in the East. We do have the U.S. dollar finally starting to show a little bit of weakness, backing off of some of that strength. We have oil popping higher after Thursday's rout in oil, down to roughly 103. We've got oil back up above 110, I think up near 111. Equities, after an absolute massacre last week, we did get that late rally on Friday to wipe away at least 1 day's of 1 day losses, and we're trying to open in the green this morning. So we'll see. We got the dollar down, oil up, equities up, and then this week we've got on Friday we've got the Fed's preferred measure of inflation. The PCE, the personal consumption expenditures. The catch is, as Brian just reminded me, next weekend's Memorial Day weekend. Friday, people will probably be out of here looking for the long weekend because we get Monday off. So yeah, we might get one of the biggest numbers we've had in a while with nobody around. I don't know if that's going to mean there's going to be no impact or a way massive over impact. Just because the markets might be thin. Anyhow, we are going to take a look at some of that and then what to look forward for the rest of the week. Before we jump into it, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this buy or sell recommendation. We are doing this for your education purposes. And here you can actually see just quickly as I flip over to the charts. I mean, oil bottoming out on Thursday. Here we are. Yeah, we're above 111. I can't believe that we would say 103 is cheap in oil. $103 a barrel. If you remember, it wasn't all too long ago, within the last couple of years, when oil traded negative. If you remember that. A weird anomaly that can actually happen in the markets when there's too much supply and not enough demand. In any case, Brian, I'm going to flip it over to you, and let's take a look at the headlines and then quickly jump into the charts for a Monday.
Yeah, I mean, this is actually a pretty high-flying Monday, I would say. The last couple of Mondays have been very, very slow as people trying to figure out what's going to happen today. Today's message is pretty clear. The yen is finally kind of relaxed for the most part. We'd had a couple days in a row with a lot of yen strength, and again, the headlines today are kind of justifying why the yen is kind of tempered back down again. It's really dollar weakness across the board. The pound yen, or dollar US, both of them are kind of up large, although retracing in the last basically like 60 minutes. Euro, same thing. Dollar Swiss down major. 73 is actually a large amount. It's not the largest mover in general, but percentage-wise of what its typical daily ATR is, also that's quite a substantial amount. Now, dollar CAD down 45-ish, retreating back a little bit in the last 60 minutes. And again, as you mentioned, oil continuing to grind back up at 111, and I don't necessarily think that story is over yet. I think that one still has more room to run. Aussie dollar also up 54, so interesting. So this morning we have had the business climate in Germany, and again, it was actually good, which I think surprised a lot of people with everything we've heard. It's considered a medium mover, but for lack of any better kind of news today, that's what we got. Bailey is speaking for the UK at 10:15 today. It is a speech, basically monetary policy interaction, and inflation in the post-pandemic world. So it is a panel discussion. It's not particularly just what we're doing here in the UK. But it could provide some insight of really what his belief of what needs to happen next. Last week, remember, we were hearing comments of Kashkari talking about how, listen, the Fed may have to induce a recession to calm inflation. So, again, we tend to be a little bit more insulated and have a little bit more, I'd say, gray area versus other nations in the world. But we'll have to see what the pound says. I mean, again, Bailey, the UK just hit 9% year over year. So kind of a big number. Could be some big headlines, particularly in the pound pairs if he says something specific. As far as weekend headlines, really what's dominating it right now is literally Biden's comments this morning about militarily defending Russia. Those are the biggest ones, and you'll see two things. One, at 6:00 this morning, it was, hey, listen, we're considering, and it's not really. He basically says we're considering reducing tariffs. They said this before, and the reason why they were doing it is not because they think that China has complied, because they haven't. We've shown it now that they have not. The original point of the purpose was like, these are unfair trade practices. You're doing this, and this. The United States economy was the only one that really could go head to head on an economic basis to really. And again, it's the IP, the intellectual property stealing, and the trade deficit back and forth. They promised that they were going to buy this and this and this and this, and they didn't do it. But what they were saying is if we reduce the tariffs, it should lower the cost of goods from China. I don't know about that one. And this was kind of one of his hopes, that it would reduce inflation. But a lot of experts are like, it's not going to reduce inflation. And again, at that point, China's like, we did all that stuff. We didn't have to buy anything we promised, and we got away with it. Thank you. And then he basically mentioned that, hey, listen, there's these new trade deals, and it's unilateral, and it's great. And they're going to discuss with Yellen when he gets home about, getting rid of these, tariffs, again, that Trump put on there. And again, the beginning, he was very for it, saying that, hey, listen, they need to do it. And now he's, basically saying, hey, we'll think about it. And at the same time, he basically just said this one too. And this came out about an hour ago. So it was kind of like, hey, we'll remove the tariffs. We're best friends. And then came out and said Monday that he'll use military force to defend Taiwan. Obviously, that's going to set China off. Again, it's a very important thing for the markets today. I forget who it was. If it was the FBI or NSA or whatever, mentioned that our biggest threat is not Russia, not by any stretch of the imagination. It's China and all China's policies. And we've seen a weakening of the dollar. China is kind of surging forward into global power right now into everything, right? And then Biden basically just made comments that, again, we'll send troops and we'll protect Taiwan, which, again, that's why we're seeing the dollar Swiss.
The two of those things are tied together. I think that he's probably playing politics in the press.
Yes.
I'm not sure what the game is, but those two are tied. It's a it's a mixed message to China, probably with a purpose. So the question is, I don't know. I'm not very good at politics.
Yeah, I mean, this is why the dollar Swiss is surging to the downside right now. Again. It is, the Swiss has long-standing been the neutral party and everything. They weren't the most neutral, but then there were some comments made that they were, we're not going to be bullied by other banks, and was kind of like, oh, what are you saying? And then they mentioned back to that, basically the neutrality status and the flight, a currency of safety. And it's kind of like, oh, are you back? And you're seeing those comments. And again, I think this is a very dangerous game, and I wouldn't be surprised if the markets move from it today. Again, China has the largest population, followed by India. Biden's in India trying to make peace with them when they're not. They said that we're not getting involved. We're not going to get on the. We're not going after Russia. They've made those comments before, and Biden's trying to, get them back on our side, and then he's going to China.
That complicates that message even more.
Yeah. So I mean,
there's something going on.
Yeah, so, and it's weird. I mean, we're not getting allies. I mean, again, we know that we have problems with the Middle East right now, and they're like, nope, and they're siding with China. India has kind of turned a blind eye to the United States as well, and obviously China is the one nation in the world with their policies. This is probably the dumbest comment you could make. Yeah, we'll military defend you. It's a nation. It's not even a nation. There's 15 countries in the entire world. They're all extremely little that recognize it as a country. The United States doesn't even do it. The UN doesn't even do it. So this is what I was saying we should have done with Ukraine to stop all the problems that we had over there, and we didn't. I'm not exactly sure why we're doing it with China, but like I said, it's a political game. I have no idea what they're playing or who's playing in it or who's saying what. I have no idea, but market-wise, probably probably not the best way. So right now, the VIX is not showing it right now because, again, it's kind of like, well, what does that mean for the market here? Nobody really knows. And again, as far as economic headlines go, we really don't have much to deal with. I wouldn't be surprised, though, if it does start to spike up in once this starts moving. The dollar obviously being a little bit weaker, and again, it just really started to collapse from last week. And again, one of the levels that we're looking at right now is, again, the 23.6 level was an old level that we had bounced off of, and again, 3 hits, we expected the drop, and that's right around the 102.80. So again, not anything we're going to directly look at, but right now we should be seeing some dollar strength coming back into the market. The indices are all a little bit in the green, but they're all at levels. Right now, if we take last week's high to the the low, you can see that we're really kind of flirting around right now with that 50% retracement level. We're starting Monday off at that 50% level. So we do have we do have a consecutive, a lower high, right? And we're kind of bouncing off of that right now. There is a gap, and gaps tend to provide, decent areas right here as well. But so I'd say it's a little sandwiched. But if for some reason today, if we start to break below this 38.93, there's a racetrack there, and I would assume the price comes all the way back down to the 38.11. NQ, this one we kind of shrunk back down again, and we're pulling it. Let me pull some of this stuff off. We'll pull this from last week, and it's basically the same picture. Okay, this is a level we were looking for, and it's funny. Now the 12.134 comes up to be the 61.8 instead of the 50, but you can see kind of the same thing. There are sellers that drove us down in price before. We ended right there, and then again we're kind of pushing off of it. Kind of the same scenario. There's really the chance of that we take a bounce off this gap, but if not, again, it's kind of off to the races to the downside today, and particularly with, again, we'll see how the business community reacts to news of potentially removing tariffs. That's, that doesn't necessarily help U.S. businesses at all, that they won't have any protection there. So, again, YM kind of the same thing. We were looking for bounces last week, and that was more intraday levels. Probably it's going to be the same thing. It's actually probably not as high, but this is an area, again, continue it across, same exact thing. We talked about this being a Globex high. We're basing, same thing, big racetrack from last week. Russell, same exact thing. Right?
Every one of them, they're playing, well, actually not Russell. Yeah, they're all playing with that 50% retracement. I mean, every single one of them actually touched it
right there
overnight. Right. I mean, every single one of
Russell's,
them.
Yeah, and the thing about Russell too is what it was bouncing off of right here is 1,800. So this is one of those big psychological ones where it's like, hey, listen, it's a big number, right? 1,800. Right there. So you're seeing it was a big number. There's been sellers there in the past. I would say that Russell right now is the strongest just by a little bit, but if things start to turn bad, Russell has more of ability to drop. The big commodities things, again, we talked about 111.82 last week. It was a level, then a very, very strong push off of it. That's kind of what we're bouncing off of right now. We'll see if that continues to move or not. Again, remember, we have 1 week till the official summer gas is in. We'll see what that does to demand, but I would say right now off the open, it looks like it's again, it's about a 1 to 1.5, 1 to almost 2 short coming off of about 6 o'clock this morning. We'll see what this one looks like today. Natural gas is down though, which is actually a good thing. Natural gas is showing down 1.6. Yeah.
Yeah, well, now that we're in summer.
Yeah, it's hovering around 8%. Again, this is one of those seasonally adjusted things. Right now, we haven't quite started the winter accumulation yet. That typically starts, I believe, in June or July is when that starts. They give themselves like a 6-month window for that. There also was a little bit of a reprieve. I did see it. This one right here. This came out about 3 hours ago. Russia's considering easing, some of the flow. Basically, it's kind of like. Basically, the ruble's rebounding a lot faster than they expected it to rebound. I think they were focusing on kind of the cheap stuff, and now it's kind of messing up some of their plans. So they're talking about easing it just slightly. Anytime you hear that, basically easing, that is one of those things like, oh, that's a good thing. That's a good thing. It's not directly right into the natural gas scenario, but Russia easing, you're like, okay, thank God, they're not going to be, super strong about it. And there was one other headline I saw. I don't know where it is now. I saw it on my phone this morning. But basically another thing about one of the pipelines that they were talking about, slowly cutting it off. Because again, they have a heart, is what they said. It was kind of the end of the thing. But again, it's a supply story. Easing it off. Zelensky though, this
no one needs it now, right now. As everything gets warmer, people will need it less. Yeah. So they'll just think, oh, great, they'll ease it up some, and they'll keep stockpiling it.
Yeah, Zelensky did call for a complete, absolute blockade of Russia. Again, it's nice when you're getting billions and billions and billions of dollars filtered in your country, but if they blockade Russia, no natural gas or no oil will get out, and every single expert in the world says it's impossible to replace that. So again, Zelensky's living in a pipe dream at this point. I don't. Yeah, let's block them from the rest of the world.
Yeah.
Okay, it would only be you blocking, because the whole piece below them is fine with working with them. So yeah, this guy. Yeah, I guess this is
of course he's going to say things like that. That's what he's supposed to do. He's fighting for his country, who's under attack.
Well, he was at
for no reason.
he's at the UN economic meeting saying this, so it's kind of like.
Oh, he's rallying support.
It's posturing.
I do the same thing about priority shoes.
Yeah. I was like, you're pretending you're an actor still. Oh wait, you were an actor still. Gold continuing to rally. Why? Because again, we've had some weak comments out there, and again, people are believing inflation is still going to move. We did take a bounce off that 1850 from last week. It didn't run all the way back down again. It went past the 1 to 3 target and found some buyers coming in there. And again, right now, the good thing is we kind of blew through another level, so we can kind of take this upper one off. It is kind of set up, and we do have an FOMC meeting this week on Wednesday, I believe. Where is it? Right here, FOMC meeting notes. So I do think that this is, by it going higher, will give us great shorting opportunities later on in the week. We know what's coming. We know it's going to basically be 0.5 twice, and we'll kind of see what it does with the economy. Like I said, I just actually took the tab down, but the mortgage rates were close to 6% now. So they're getting up there. Last week we actually touched 7 on the 10-6 arm. They pulled back a little bit, but again, it looks like they're still going to continue to surge. So right now, I would say the same level, probably not worth the same short. It is confirmed, though. It did pop through and give us a Harry Potter long. Right now, I would say, this is probably a decent top up here over at 1862, but again, look for this one to be tested. And like I said, I would be okay with this continuing to rally until Wednesday and then figuring out how to get short that one in the overnight. And actually, in reality, you could probably put that on tomorrow night as well. Silver, again, it's doing the same thing. It didn't quite make it to the target. We got all the way back down, and we missed it by just a little tiny bit. Actually, this is off a little bit. I must have moved it a bit. Yeah, we didn't get all the way down and just missed it, and now it's doing the same thing. It's kind of rolled over in the overnight. Still hovering right around that $22 figure. Again, right now, 22 seems like it's going to be the ceiling for this one. And again, I would say this one probably ticks back down again. But again, remember, silver does have an industrial base. Anytime we hear anything about China, we should see some movement in silver as well. So, but on the currency fronts, obviously, we got yen weakness across the board for the most part, except versus the dollar, where it's basically just flat, kind of shoveling back and forth. The cryptos are not really leading the way today at all. They're more or less flat. Bonds, TLT is opening down, which shows us that there's probably going to be a little bit more appetite to get into the stock market today. And again, with the news, there's not really a whole lot out there that, like I said, nothing major right now. They're like, oh, I got to watch out for this. If the news really wants to talk about, Taiwan all morning today, that probably will put a little bit of vinegar in somebody's coffee, but for the most part, there's nothing out there today that we need to necessarily, be concerned about. Tomorrow morning early, we do have all the manufacturing and services PMI numbers coming out, and those will be interesting to watch. Remember, all these, none of them are forecast to be kind of on the low side, but remember, anything above 50 it shows expansion. So we'll see if we still have that expansion. If there's any that are below 50, that'll be a major mover for the euro tomorrow morning. And then again, New Zealand is raising interest rates tomorrow night, but we'll talk about that tomorrow in our longer session. So, all right, that's it for today.
Okay. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian or for me, we are available via email. You can email Brian, please. Feel free to ask him questions. Email Brian at support@keeptradingsimple.com. Just a quick way to recap what we've got going on this Monday. We are seeing the dollar down. It's finally showing a little bit of weakness after a pretty significant run up. We're seeing equities trying to hang in there. I know that everyone's really talking about the bear market, how close we got to a bear market, which is a 20% closing with a 20% pullback. We actually got in that territory on Friday, but then we had that late market rally, trying to open a little higher this morning, and oil punching higher. Brian and I will be back tomorrow morning. And until then, by the way, if you like what we're doing, please give us a like. We do appreciate that, whether you're watching us on Facebook or on YouTube. And until tomorrow morning, good luck in the markets, everyone. Thank you so much for joining.